Well, we turn our attention now to what's happening on the currency markets. The dollar's kind of where it has been against the yen. What has been moving, of course, in the last 48 hours is sterling. Sterling dollar down to 153.39. Sterling index is at a 12-year low, and it's touching all-time lows against the euro right now. For more, we're joined by Ross Burland, head of corporate dealing at RationalFX. Ross, thanks very much indeed for joining us. We just saw the biggest monthly jump in unemployment since 1992 out of the UK. Got the inflation report coming out. I mean, how much weakness is there potentially for sterling? Because we've had such a big drop in a short period of time.
Plenty more, I would say. You know, it's just continued downbeat news on the UK economy. You know, the moves of which we're trying to make to bring us out of this situation, you know, seem quite drastic, you know, cutting by 1.5%. I think really that was just to shock the markets, because cuts were expected more along the way. With this job number report, we can see, you know, paving a way for further downturn in the economy.
You know, I suppose what's really going to push is the government's going to keep borrowing more, and the cost for them doing that is going to go up, because not many people necessarily want to fund it at the current gilt rates. What are your targets then for euro sterling and sterling dollar? Okay.
Well, I would say, you know, the markets tend to like to push these barriers, don't they, these kind of levels. So we could quite happily see sterling go into the 140s here. There will be support here in 150. There will be an awful lot of support. But as I said, you know, markets like to break these barriers, and I could see that going into the high 140s. Sterling on the crosses again. You know, over the course of time, we've been seeing sterling being sold off continuously, and I'd have to say in this market, the trend is your friend.
Ross, hey, it's Maura here in Asia.
Hello.
If you shift your focus and look over at the euro, for example, there's been some criticism that the ECB is not doing enough to lower interest rates. They're at, what, 3.25% right now, and that there's a lot more room to come. We had a guest on earlier who suggested that Mr. Trichet should possibly look at factors other than inflation, because they don't really exist anymore in euro land. What are your thoughts on this?
Well, we've got the figures coming out this week, haven't we? We're seeing GDP, and also coupled with the CPI report. Now, with both of those looking as though the numbers are going to be coming out downgraded from last month and year on year as well, you're absolutely correct. You know, Trichet has to do something a little bit more than, you know, these tendent cuts.
Ross, it's Brian Shackman here in the U.S. It's funny, when I started doing the show Worldwide Exchange over a year ago, it was easy to read the currency boards, right? When the dollar was weak, the yen had a red arrow, and cable and the euro had green arrows, and that was weakness in the dollar. It seems like they're all functioning separately. You know, in terms of synchronization, will we ever see a situation again where all these currencies are in some sort of synchronized movement?
Not until, you know, I mean, basically this is a global scale. There's an awful lot of uncertainty still. You know, these markets, I mean, it's risk averseness, isn't it? And the dollar is king at the moment. You know, it's the world commodity currency. You know, the yen is always going to benefit from the unwinding of the carry trades. I mean, we have this Friday, it'll be quite interesting to hear Bernanke and Trichet speak, and their rhetoric there. I mean, that could weigh heavily on the yen, and perhaps, you know, the commodity currencies may well benefit again from that, such as the Australian dollar.
Well, yeah, what it's interesting, isn't it? Because stimulus on Monday sort of boosted commodity currencies, the Australian dollar, briefly on Monday. But there's also this sense that actually people don't want to buy into the yen ahead of the G20, but once they hear it, and then maybe we don't get anything that's very concrete out, they might then buy the yen after that.
Yeah, that's right, absolutely. But
do you get a sense that there's, I mean, it's positioning ahead of events is always the important thing, isn't it?
Yeah, that is true. But I mean, I do feel, I think, you know, from this, I think the Australian dollar, the commodity currencies, and the riskier types of play could actually benefit from the kind of rhetoric we might be hearing on Friday.
Really, but that depends on actually there being a change in the global demand situation, or their thought that they'll do something that changes that, right? I mean, that's the theory.
Absolutely, yeah.
Okay, we'll see where we go. Good to see you, Ross. Thanks very much, Steve, for that. Ross Burland, head of corporate dealing at RationalFX, a man whose name I can pronounce correctly.